implications of the HDFC Bank buzz and a source-based story that SEBI may not allow mutual funds to have a combined exposure of more than 10% of the combined entity. To give a backdrop here, SEBI regulations are very clear that no single mutual fund scheme can have more than 10% exposure in a single stock, even if the benchmark index or the benchmark weightage could be there. And I think this, in a sense, was a very big talking point when in 2020 Reliance was only going higher and every mutual fund wanted to increase the exposure to Reliance, but they did not have the permission or the regulatory approval to do that. Right now there is a special situation. HDFC Bank and HDFC Limited will merge, and we understand that the 60 mutual fund schemes which could be affected directly, indirectly, now that there is an indication that SEBI may not allow any fund to have more than 10% exposure to a single stock. Doesn't matter what the underlying weightage is. But again, this source-based story, we've not got a confirmation independently. We simply are quoting what one of the media wire agency was reporting. But we can take the story forward, and if this has to happen, could this have an impact on the stock price of HDFC Bank? Deven, Choksey, good afternoon. What do you think?
Hi, Nikunj. Good afternoon. Well, at the outset, I think put together both these companies will achieve a market capitalization at current market price of around 14 lakh crores. So obviously, I think one thing is certain that the weightage of a merged company will definitely remain higher in the entire index basket as we see it, even if I think one wants to look at it as a single entity. The second point which I believe that I think since this is an exceptional situation wherein they merge, probably a number of schemes which are getting affected because of this, I think, is higher. In my understanding, I think the regulator will take a considerate view, because if they don't, then the fallout effect of it is that ingenuinely the stock prices would unnecessarily come down or fall, and which would probably hurt the overall investors' interest into the market. So that I think not technical issues do not affect, I think, the overall interest of the market. I would think that the regulator would probably try and take an exceptional route here and probably set the benchmark. But in an exceptional situation like this, I think they are allowed to reduce the stake over a period of time, if not immediately.
But Deven, wouldn't you expect the clarity to come sooner rather than later? Because what we understand from sources is also that the record date could be in July itself. And again, the articles are suggesting that at least 60 equity mutual funds will have the combined exposure, which will overshoot the 10% cap. And that could be a humongous number if you add it together. Shouldn't one expect the clarity to have come sooner itself?
Ideally, yes. I think, and as a regulator, I think they are quite mindful about the situation in the market. I'm sure, I think, with this story, probably regulators have started working on it, I think, for the technical issues that is arising out of it. So I agree with you, concur with you, that I think it should be sooner and not later.
What needs to change for HDFC Bank to regain its mojo?
Yeah, that's a good question, Nikunj. I guess I think the fundamentals of the bank have probably remained extremely strong and convincing. In my understanding, I think with the merge book, probably they have got the higher amount of balance against the corporate loan book, the retail loan book, even housing finance loan book, and the prime sector loan book. I guess I think that they have already got a significant amount of balance, I think, as far as the portfolio is concerned. According to me, what is lacking in HDFC Bank, and which is generally the view that we all analysts also carry, probably the bank has to come out with a very smart acquisition strategy of customers, or for the even for corporate loans. I think they should have a relatively faster process to close the offer which has come or the process which has come. I guess I think their digital framework probably at the front end is required a complete revamp, which I believe they are doing it. Should that happen in a good time, then I believe they hold a good chance, because I think currently 24 lakh crore AUM of the merged company and eventually going up to at the rate of 20% growth, is going up to around 50 lakh crore in 4.5 years or 5 years time. And in such situation, I would like to believe that I think the bank will be successful only when their digital framework is stronger, their ability to acquire customers is stronger, their ability to close the transaction is stronger, and in turn, I think, manage the cost structure also well within the organization. That is lacking. If that happens, then that could be a more, I believe.
Right, Deven. We leave it at that. Thanks so much for joining in with that perspective. We've talked about HDFC Bank and the kind of overhang that you're seeing on the stock. Let's talk